Good morning, everyone. It is Julie here with your Friday morning stock market news, where we're getting you up to speed with what you need to know as the market opens. So let's get into it. All right, guys, welcome back. Thank you all so much for being here and TGI Friday. I am very excited that the weekend is finally here. Gonna go do some camping tonight, so really looking forward to sitting around that campfire. Hope you guys have some great plans as well. Now, as usual this morning, we're gonna take a look at exciting stock market news, notable earnings reports, and which stocks are the morning's biggest gainers and losers. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into this morning's exciting stock market news. We are ending the week off with U.S. stock futures in the green. Right now, Dow futures are up 0.17%, S&P 500 futures up 0.39%, and NASDAQ futures up 0.63%. Amazon, Google, Meta Platforms, and Microsoft are just some of the companies that have made commitments regarding the safe use of AI to the White House. The administration struck a deal with some of the big U.S. tech companies to help manage the risks posed by artificial intelligence, including ensuring users know when content is AI generated and allowing external security testing of their systems. The companies committed to using digital watermarking to help differentiate between real and AI generated content. The White House said that these commitments, which the companies have chosen to undertake immediately, underscore three principles that must be fundamental to the future of AI: safety, security, and trust, and mark a critical step towards developing responsible AI. Shares of Digital World Acquisition Corp are on the rise this morning, currently up 20% after reaching a settlement with the SEC regarding their SPAC deal to take Donald Trump's social media platform public. The SEC concluded that DWAC allegedly misled investors and the SEC by failing to disclose that it had formulated a plan to acquire and was pursuing the acquisition of Trump Media and Technology Group prior to their IPO. The SEC will enter a cease and desist order finding DWAC violated certain anti-fraud provisions in connection with its IPO filing. Digital World will have to pay an $18 million fine if they were to complete the merger transaction. And KKR will be acquiring specialty chemicals maker Chase Corporation in a deal worth $1.3 billion. KKR is making the investment through their North America Fund 8, which invests in industrial businesses with technical and material science capabilities. The acquisition is expected to close in Q4 this year, subject to receiving shareholder approval and regulatory approvals. Analysts currently rate the KKR stock a strong buy with an average upside of over 10%. Now moving over to notable earnings reports. Not much happening in the after hours today as the week wraps up, but in the pre-market this morning, we did hear from American Express. They did come out with an earnings beat, however, they did miss on revenue and the stock is currently slightly in the red. The company did maintain their full-year guidance, and Q2 earnings per share of $2.89 came in 8 cents ahead of analyst expectations. However, revenue of $15.05 billion did miss by $310 million. Analysts currently rate their stock a hold with a slight upside of over 1%. And we heard from Schlumberger. They also had an earnings beat, but revenue miss. Their Q2 earnings per share came in just ahead of estimates at 72 cents, that is 1 cent ahead, and revenue of $8.1 billion did grow by over 19% year over year, but fell $110 million short of analyst expectations. Their stock is currently rated a unanimous strong buy with an upside of nearly 15%. Moving to the after hours last night, we did hear from PPG Industries. Now they are slightly in the red despite an earnings and revenue beat. For their Q2, they reported earnings per share of $2.25, beating by 11 cents per share, and revenue of $4.87 billion snuck in just ahead of the estimates by $30 million. For 2023, they're expecting earnings per share between $7.28 to $7.48, which is ahead of analyst expectations. Analysts currently rate the PPG stock a moderate buy with an average upside of 4.5% and a mix of buys, holds, and sells all coming in within the last day. Then we also have Intuitive Surgical, a similar situation. They're also a bit in the red despite an earnings and revenue beat. Their revenue of $1.76 billion came in just $20 million ahead of expectations and did see growth of nearly 16% year over year, while their Q2 earnings per share of $1.42 beat expectations by 9 cents per share. Their stock is currently rated a strong buy with an average upside of nearly 8% and all buy ratings coming in today. And Capital One came out with mixed results, beating on earnings but missing on revenue. Their revenue of $9.01 billion missed expectations by $130 million, while their Q2 earnings per share of $3.52 beat expectations by 28 cents per share. Analysts currently rate their stock a moderate buy with an average upside of 4.5%. Now let's take a look at which stocks are the morning's biggest gainers and losers. Our biggest gainers this morning are led by POSCO. They've been on the rise following their earnings report earlier this week. Trading under the ticker PKX, the stock is up 9.4%. They're followed by Brookfield Renewable Energy under BEP up 7.23% and Universal Health Services under UHS up 5.6%. And our biggest losers this morning are led by SiriusXM. Their stock was downgraded by an analyst following their massive run. Trading under the ticker SIRI, their stock is down 9.2%. They're followed by Interpublic Group under IPG, down 7.8%, and IQVIA Holdings under IQV, down 5.7%. So that is going to be everything for Friday morning's stock market news. If you made it to the end of today's video, make sure you say good morning in the comments. I always love hearing from you guys. Thanks so much for watching. I hope you have a great weekend, and I'll see you back here on Monday.